This is the Retirement Key Podcast with Abe Abich, founder of Abich Financial Services.
When it comes to your investments and artificial intelligence, is it too much risk to be dabbling when you are in retirement or even just a few years out? This is what we want to talk about here today on the Retirement Key. I'm Heather Branch here with Abe Abich, financial advisor and founder of Abich Financial Services. TheRetirementKey.com is our website and where you can go to begin the conversation with Abe and his team about your retirement savings plan and taking those savings, putting them to work for you in retirement. We also have links posted in the show notes. So, I don't have to tell anybody about the volatility we've all been seeing in the stock market continuing on for many different reasons. The international conflict, the domestic, the national conflict. There's a lot going on in the world.
Right.
And as we evolve all over the world in the space of the digital age, artificial intelligence, and what it means for our savings, how we can benefit from it, it's just a conversation that none of us have any real experience with. So when it comes to how we can invest in artificial intelligence, there are days that the AI stocks are doing great. They are not getting hammered, but on those days, they are hammering other stocks that haven't quite caught up with the technology. In the meantime, some days we see AI stocks, crypto, all these different digital things just taking a bath. This is Jeremy Siegel recently on Fox Business, economist Jeremy Siegel, I should say.
I've never seen anything like it. You get little hints that, oh my God, we're not going to have any truckers, or oh my God, it was like the pandemic. No one's going to rent commercial real estate. A lot of that was overdone, but I think it emphasizes the disruptive effect of AI, how rapidly it is proceeding, and how little we know for sure what direction it's going to take.
Kind of feel like that's the way it is with everything in the market, though, Abe. None of us know what direction it's going to take day in, day out. Perhaps the current feel is because it moves so fast with AI. Can disruptions in the market actually create opportunities for retirees, or is it mostly risk and too risky?
Absolutely. Look back to COVID. Look at all the opportunities there were in COVID if you just didn't freak out, right? If you had cash on the sidelines, man, talk about the buying opportunities that you had in COVID. And we're saying the same thing now. Look, I think we were due for a reset when it comes to technology and AI stocks. It's time for a recalibration, right? But there's always opportunities in the markets whenever, the markets are red hot or whenever they're actually a little shaky and maybe a little volatile. But there's pieces of the market that are performing very well right now. Just because technology isn't, and emerging technology companies and stocks aren't, and AI stocks maybe aren't right now at this time of the recording. They've done extremely well over the last handful of years, and that doesn't mean they're not going to bounce back, right? So that could present a great buying opportunity. Are there opportunities right now? Absolutely. You look at energy, you look at industrials, you look at consumer defensive. Energy right now, as of the time of this recording, is up over 20% year to date. You look at industrials, companies like Caterpillar, doing really well. You look at consumer defensive companies like Costco, like Walmart. That's kind of what people are looking for right now. That might be where the markets are headed, maybe for this year. But there are opportunities in the dividend payers. The IBMs and Lockheed Martins and the Home Depots. Those companies are shining, and those parts of the markets right now are shining, while other parts of the markets are getting hit and not doing as well.
Okay.
Right?
Okay.
So back in 2025, those companies I just mentioned didn't do as well as the companies like Amazon and Apple and Tesla, Nvidia, Palantir, all these companies that have just driven the entire markets for the last handful of years. And it's time for a break. And that's okay. It was time for a reset and recalibration, and the market's rotating, and you need to be prepared for that. So yes, there are opportunities right now, and the opportunities are there in the other parts of the markets that are actually performing well.
Okay.
Which is why you don't want all your eggs in one basket, Heather. This is common sense, but maybe not common sense, or maybe it doesn't reveal itself to everyone until a time like this, right?
Sure.
Where they're like, wow, you know what? I wish I wasn't all in Tesla, Nvidia, Palantir, and all these companies that have done really, really well the last handful of years, because right now they aren't doing that well. I wish I didn't have my entire nest egg, or the majority of my nest egg, in stocks like that. I wish I was more diversified, and that's why it's so important to not have all your eggs in one basket, to have pieces of the portfolio that are principal protected, to have equities, fixed income, and even in your equity component of your plan, not be all in on tech. not be all in on AI. Be diversified, right? I mean, you probably wouldn't want to have all your money in crypto right now, right? And no one would do that. I mean, you shouldn't do that. You should have pieces of it maybe in that part of the market if that makes sense for you. But you want to be really well diversified.
Right. So let's talk time perspectives then, because as I was saying, yes, disruptions create opportunities in the market for sure. But for somebody who is retired versus somebody who is 5 years out from retirement, how are you guiding people in these two different perspectives in a market that, as we have seen, it moves so fast? I mean, as of late, we've seen 2% shifts in one day in the market. So again, thinking about the people that you work with, because we always say, you know, if you're 5 to 10 years out from retirement, come to Abish Financial. Let's begin the retirement planning process. Or if you're already retired and then you're working with a lot of folks, you've got them into the retirement phase. You got these two different perspectives that people want to know, Abe. What are you telling them?
Yeah, and I think just to go back real quick for those people that are watching this right now that are retired, the key word I'm thinking of right now is stability. That's what you want in retirement. It's predictable, dependable, reliable, stable income, and a stable portfolio.
Boring is good.
For those of you 5 to 10 years away from retirement, 5 years away, I think is a great time. 10 years. Yeah, it could be a good time. You may be too far off, right? Because you may not have saved enough yet, and you may still need to really focus on saving and taking on a lot of risk. But 5 years or less away from full retirement, a lot of people actually already have their number. They actually already have enough saved to retire, but they're not even 60 yet, right? They might be 55, they might be 57. They might not be able to take Social Security yet. They may not be ready to retire yet, just mentally, right? Again, they might not even be 60 yet, and they just want to kind of punch out at 60, 62, 65. But they're 5 years or less away. We call that the retirement red zone. In my opinion, our opinion's a fantastic time to put together a plan. We here at Abish Financial meet with our clients usually 4 times per year. If you were 5 years or less away, 5 years away, that's 20 meetings minimum you would have with us here at Abish Financial to go over your plan, go over it. Make sure you're tying up all the loose ends, doing everything you possibly can, not just from an investment standpoint, but all the other things you have to factor into that plan. 2 or 3 years or less away, or even less than that to a full retirement, the timing becomes super, super important because you don't want to let some big market movement wipe out a lot of your nest egg right before you retire, or something dramatic happen with your plan that maybe causes you to work longer, things like that. So 5 years or less away is when you really want to really consolidate, streamline, pull all the resources together, rollovers, transfers, make sense of what your new plan is going to be. That start thinking about that shift, right? From climbing up the mountain, that ascent up the mountain, we call it the retirement mountain. And I wrote a book about this, the retirement mountain, the 7 steps to a long lasting retirement. That ascent up is phase 1. That descent down is phase 2. You're going to start to shift from growth to growth and income. Phase 1 to phase 2. You probably want to start to reduce risk and things like that and put together that comprehensive plan so that you can pull the trigger and retire on your terms with dignity and confidence.
So what I'm hearing you say is for those who are 5 years out from retirement, a lot of folks that you meet with at Abish Financial, they already have what they need. So why risk it? Is that
a lot of people do already have what they need 5 years out, and for sure a lot of people here in the DC metro area, that's where we're headquarters in Ashburn, Virginia, have what they need, and they kind of know that, or they're realizing it with us, and then they're motivated that much even more to pull the trigger and retire.
Right. Right. And it goes back to also another conversation that you and I have had a lot. The idea of diversification takes on a whole new meaning in retirement. When you're in your growth years, you want to diversify in your growth opportunities, but in retirement, you want your income to be diversified. And again, it's not that you're saying don't have zero risk. If AI disruption is interesting to you and you want to have part of your savings carved out where you can be a market investor and those kinds of things, those are also parts of the plans you build, right?
Absolutely. Look, so most people we see, Heather, that are in their late 50s, maybe in their 60s, even 70s, are somewhere between a 60 to a 70% in equities, right? So for every $1 million, you might have between $600,000 to $700,000 in equities. That's with a growth focus, because if we live into our 80s and 90s, we need to get that money to last. We need to beat inflation. We want it to pass on and be there for us in our later years. But 30 to 40% might be in fixed income. And there's tons of solutions and products and investments in that fixed income category. But the main thing to be aware of and to realize is that you need growth and income. You need risk and safety. And so that, especially when the markets are down and volatile and not doing what we want, we've got a bucket of money, we've got a bedrock, a foundation built into the plan that we can withdraw from. When the markets are down especially, we have a plan B, a backup. And when times are really good, man, we've got the majority of our money really taking advantage of those upswings in the markets. It's that combination for good, steady returns with the least amount of risk possible is key in retirement.
Got it. Well, when it comes to understanding your risk levels, how much you currently have, how much risk you need to continue to have into your retirement years without losing growth opportunities, this is the work that Abe and his team, they're doing every day in the office at Abish Financial. They are here to help you as well. If you've got questions, theretirementkey.com. Abe, you brought up the idea of your book, The Retirement Mountain, the 7 steps to a long-lasting retirement. Obviously, the idea of growth, steady growth, maybe a little bit more boring growth opportunities. I said the word boring earlier. It's not a bad idea in retirement to be a little bit bored when it comes to our finances, after all.
Boring can be a good thing in retirement. You're not waking up at night. You've got better sleep at night. It's that stability is a key word, right? So again, good, solid returns with the least amount of risk possible.
Abe's book, The Retirement Mountain, lots of ways for you to get your hands on this information. Abe worked hard to put it into an easy to follow, couple-hour read that you can do on a weekend afternoon. If you come into the office for an appointment, we'll give you a free copy of the book. You can buy the book on Amazon. You can download the audiobook on Amazon. You can also download a free PDF version of the book. Again, Abe is just looking to empower you with information. That is his goal of this book. It's not to get rich and become the New York Times bestselling author. It's to empower hardworking Americans with the information that they need to retire comfortably and confidently. So we've got links to all of that, to the book for you to get your copy of it, however which way you want to. Post it in the show notes as well. And then also don't forget to begin the conversation with Abe and his team by visiting us at theretirementkey.com.
Thanks for listening to the Retirement Key Podcast with Abe Abich. To learn more about Abish Financial Services, visit theretirementkey.com. And join Abe for his radio show, The Retirement Key, Saturdays at 8 a.m. and 2 p.m. and Sundays at 8 a.m., 2 p.m., and 5 p.m. Abish Financial Wealth Management is a registered investment advisor with the SEC. Registration as an investment advisor does not imply a certain level of skill or training, and the content of this communication has not been approved or verified by the United States Securities and Exchange Commission or by any state securities authority. The information contained in this material is intended to provide general information about Abish Financial Wealth Management and its services. It is not intended to offer investment advice. Investment advice will only be given after a client engages our services by executing the appropriate investment services agreement. Information regarding investment products and services are provided solely to read about our investment philosophy and our strategies.